So in this video, I'm going to be talking about China and trade, right? And the relationship between China and the world when it comes to doing business and trade, right? So what we have to do when we're looking at things like GDP and even things like risk and risk on and risk off, right? And risk sentiment is understand where economies are, who the big players are, and who, when downturns do come into play, how it affects the world, if it does affect the world, or certain obviously players and economies within the world, right? So China, right? We're going to talk about basically like trade partners, right? Now China are the second biggest economy, right, in the world. Number one being the US, and what's happening recently with this Trump trade war is having an effect on obviously the world, and I'm going to explain pretty much why. Now, China have had an economic, over the last 10 years, have had economic growth beyond anyone's pretty much wildest dreams, right? And this is an article from 2016, but it basically, there was a little downturn in 2015, right? And it caused market shocks, right? But what it says in this article, among other things, is that it says, after experiencing rapid growth for more than a decade, right, China's economy has experienced a painful slowdown in the last 2 years. So you can see from pretty much from around 2000 to really 2010. Right, you can see probably 2006 we had massive, obviously growth. Imagine 1990, there was massive growth there. But over the past 10 years, China, has been, a power player in the world when it comes to what they sell, right, which is exports, and obviously what they buy, which is imports. Now think of exports and imports just basically like outgoings and incomings. If you're selling more value wise than you are bringing in, think about your own account. If you're selling more than you're spending, then you're going to have what is called a surplus. And if you're spending more than you're selling, then you're going to have a deficit, right? It's a very simplistic way of looking at it, right? But pretty much that's how it works, right? Now, China are the are a massive player when it comes to importing and exporting. And if they slow down, right? If they do slow down, then the world is some of the world's biggest economies are affected. So the relationship between China and other countries, like, for example, Australia, right? Australia and New Zealand, as well as matter of fact, there's a lot of other commodity countries. China's slowdown affects them, because you have to think about, if you look at Australia, right, we go to Australia, right, and we're looking at their biggest trade partners, so who they export to and who they obviously import from, right? So Australia's trade partners, so here are Australia's top 10 two-way trade partners. So Australia is a commodity based economy, right? So they export a lot of iron ore, coal, gold, copper, right? And who are they exporting those goods to? They are exporting them to China, who again over the past 10, 15, say 15 years, but 12, 13 years were building a lot, expanding in GDP. And if someone is obviously expanding in their infrastructure, right, and I'm selling you that infrastructure, like I said, iron ore, coal, gold, copper, etc., right, commodities for you to build your infrastructure, then you're my, biggest export partner. So what happens if the person you're selling to, or the entity, the business you're selling to, goes through a bit of a downturn? What's going to happen is that it's going to affect your profits, right? So it's going to affect Australia's economy if China stop, or if they go through hard times, right? So China is you have to keep an eye on China, and as the effect that it has on other countries. So for example, New Zealand, right? So main exports and key trading partners, top 10 partners in 2016, Australia and China, right? European Union, USA, Japan, Singapore, etc. But China are one of, if not New Zealand's, biggest. Here we go. So world's top exports also shown trade. China's also shown is each trade partner's percentage of total New Zealand exports of China, is 22%, 22.8% of total of New Zealand's exports. Australia is 15.6%. So if China start going into a downturn, it affects the world, right? Canada's trade partners. So you have obviously the United States, European Union, and then China are third. And again, Canada's biggest export commodity is oil, right? New Zealand is, dairy and meat. Australia is things like iron ore, copper, gold, etc., right? So when China start to slow down, or if there are, trade fears that are, happening, and even if they're not trade fears, just potentially a Chinese economic slowdown, that has to have an effect on, and that is going to have an effect on those countries who export and depend on China for their economic health, right? So when you're in a situation like this, where you have Chinese potential slowdown, right, you have to start looking at certain countries and others as well when it comes to risk, and who will benefit from a Chinese slowdown, who's going to put their money into certain safe havens, for example, like the Japanese yen, because of basically fears and uncertainty, right? And what I'm going to do is I'm going to show you, matter of fact, a chart of I think it was 2015, 2016, and this article right here, which was China's economic slowdown, slowest in 25 years, January 2016. But there was also another article where we basically had Chinese fears, and you can see the effect that it had on price and where risk sentiment was. So let me just find the chart now. So here's a chart of the dollar yen, right? And in 2015, around September and into 2016, there were fears, the market theme and worries were that China were slowing down, right? The Chinese economy, GDP-wise, wasn't growing as much as once was expected at the time, and fears were coming into the market that there was going to be potentially a global downturn, because if you have the second biggest economy potentially going into the contraction phase of the business cycle, right, then that doesn't bode well for a lot of other economies. Like I said, because China is a lot of economies, major trading, export partners, and if they slow down, then the world, feels it in their pockets, and where, in their economies, right? So you could see that it started really around, late August into September, and then we had continued fears. And if we look at the sentiment at the time, so Chinese economy grew 6.9% in 2015, a 25-year low, right, in 2015. Right, so China's economic growth, so 25-year low. The world's second largest economy continues to shift away from its manufacturing roots, and so on and so forth. Right, and if we look at trading economics, you'll see what was happening around that time. You can see, the dip in China GDP growth rate, right, where you had towards the end, there was the fears was around here. And then you started having the dip, right? Hence the news stories, hence price, right? Dipping away. And then it's no coincidence, obviously some other factors as well that was coming into play, but it's no coincidence that, towards once China started, those fears started to alleviate, right? And maybe it was just a dip, just a blip in their economy, that risk on, and prices started, to rise as far as commodity currencies, etc., etc. So, not to make this video too long, but one thing you do need to keep your eye on when it comes to understanding GDP. We don't need to necessarily always look at, for example, the Australian GDP, New Zealand's GDP, Canada's GDP, etc. Right? We can look, even though we're not trading the Chinese yuan, or you could trade it if you want to, but as far as the major currency pairs that are traded amongst retail traders, the Chinese currency isn't one of those currency pairs. But it doesn't mean that we shouldn't look at China and what's going on over there as far as their economic data, right, and what they're doing, because it has effects on our trading decisions, and as well as risk sentiment, right? Because again, the currencies like the Japanese yen and the Swiss franc will benefit from a risk-off environment. And if there are fears and uncertainty regarding the economy, we got obviously our trade fears going on at the moment. This is July 2018. The markets are falling at the moment, right? Eurozone factory growth, where is it now? I read the article here. Right, so pretty much you just there's some blog posts here basically talking about isn't impressed by Trump's claim that Europe is as bad as China. So Trump is basically just inflaming situations. So yeah, what we have to do again is just understand that China is a big player. Keep our eyes on China and the effect that it will have. That way we can make smarter trading decisions when it comes to our currency pair selection, and which way we want to trade, whether we're buying or being a seller. Again, if you have any questions, just email me at trading180, info@trading180.com.